But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Good afternoon, good evening, good morning, wherever you are on the planet. Welcome back to the Junius Maltby channel. Here we are for the extemporaneous ramblings of a madman, yours truly, taking a look at the markets today, some headlines, and news that really isn't news to you or I. This is not news. This is something we expected. This is something we knew was coming. No, I'm not talking about the sell-off today, although we are looking at that currently. That's what's up on the board. That's what you can see. Markets are closed. However, the Dow took quite a beating today, down 2.78%, 807 points. S&P down 125, down 3.5%. Taking a look at the NASDAQ and the Russell, we have the NASDAQ down 4.96%, almost 5%, down 598 points, just shy of 600. Russell down 47.6 with the VIX up 26.46. This isn't the main story. We had to cover it because obviously this is quite significant for today and what's been going on lately. Of course, Wall Street has an excuse for it. This is being termed a healthy correction. It's a tech-led sell-off that's part of a healthy correction as it blows off some excessive speculation, with the stocks plunging and the Dow dropping more than 800 points as tech shares snap a 10-day win streak. So everything's normal. Don't worry about it. And we'll get to an article at the very end that you'll find interesting, telling you not to buy gold. Do not buy gold during these times, even though big investors are. It's not something you're capable of, not something you should do. I'm sure some of the new metal holders are in a panic. That's to be expected. They don't understand that metals are going to take dips. We don't control the market. The Fed, the banks, the Treasury, those guys still do. Many of the financial firms are going to dump metals because it's really the only thing they hold of value. They got to cover their losses, cover their margins. We've seen it every single time the markets take a significant dip. Oftentimes they do tend to take metals with them. We're still up significantly on the year. As a matter of fact, let's take a look at where metals are sitting on the year. First one up, the chart we show quite often here. This is gold. For 2020, we're still sitting up at 27.7%, one of its best years in the last 2 decades, 27.7%, nothing to balk at whatsoever. We've got an average still sitting at around 11%, smashing records in all currencies. Now, we're going to get into debt in a moment. We're going to talk about debt, some recent news. I actually noticed it on a newsstand this morning, on a Wall Street Journal of all things, as I was in a store. I took a picture with my phone, sent it to some friends, and decided to come home and we would have to talk about that headline. And the headline is coming up in a moment. You'll see it. So bear with me. Let's take a look at silver, though. Now here we've got silver's percentage performance in annual changes here. 2020 at 53.6%, absolutely astonishing. Again, one of its best years in 2 decades, doing very well, averaging 13.6%. Also, doing really well, smashing records in all of the currencies you see listed here. So both gold and silver performing well. They've kind of stabilized. We knew there was going to be somewhat of a retreat. We talked about it when it breached that 2,000. I thought there was an outside chance that it wouldn't go below 2,000 ever again, similar to the way it performed when it breached $1,000 gold. And we're, still hanging around that 1,900 range. I mean, it did a pretty good run for this year so far. You've got to give both metals some credit. And silver especially caught up quite well to gold. Both, again, doing well. This is not something to, just because the markets dip today doesn't mean it's a guarantee that metals have to react a certain way. They're going to have their time. They're having their time. You don't have to worry about them. They do their thing just as they will and just as they should. And as a matter of fact, let's take a look at some news that I think is going to point to further, aside from all the things we've talked about in the videos prior to this, other developments, other news. You know the backdrop, both the economic backdrop and the geopolitical backdrop on why metals are essentially a sure thing at this point. Let's take a look at what's going on, though. I mentioned I was in a store today, and I saw that the U.S. debt is going to reach 100% of its GDP. Quite surprising. Something we've talked about in the past. Yes, it was predicted. It's been called for. And the headlines today abound of the stimulus, creating a debt not seen since World War II. A debt nearly equal the size of the entire economy for the first time since World War II, with the debt expected to surpass 100% of GDP and $3.3 trillion deficits. With headlines like this, how can you doubt where gold is headed? Federal borrowing amid the pandemic puts U.S. debt on path to exceed World War II. Unbelievable. U.S. to owe more than the size of its economy for the first time in 75 years. We're not fighting a world war, and the pandemic, well, it's a joke. I'm not going to get into the science, the medicine, and the numbers that are now coming out, the real truth that historians will look back upon and question the motives behind what took place when it came to the controlled demolition of an economy for such a panic. That's really what it was. Panic. It wasn't a pandemic. It was panic. Hysteria. Crazy people. The amount of U.S. government debt has grown to nearly outpace the size of the nation's economy in the 2020 fiscal year and is set to exceed it next year as the virus downturn saps tax revenues, spurs government spending, and necessitates record amounts of federal borrowing, the Congressional Budget Office said on Wednesday. Federal debt as a share of the economy is now on track to smash America's World War II era record by 2023. The federal government's accumulated debt burden is projected to be larger than the overall economy next year for the first time since 1946. Debt is expected to reach an all-time high of 107%. They're expecting it to reach 107% of the gross domestic product, the GDP, in the year 2023. The nonpartisan Congressional Budget Office expects the deficit to reach $3.3 trillion in the fiscal year ending this month. And that's about 16% of GDP, a level not seen since the end of World War II in 1945. Now, the nation's debt has been a theme on this channel since the beginning. We've talked about it. We've painted the picture, connected the dots on how it relates to precious metals, the purchasing power and the value of currency. So hopefully you can see what this means and you have your own internal predictions and your gut feeling that's telling you what this is possibly going to represent in the future. Again, another article stating that for the first time since World War II, the U.S. government's debt will roughly equal the size of the entire American economy by the end of this year. Again, this is coming from the CBO. The rapid change is largely due to the surge in new spending the government authorized as it tried to control the economic impact of the coronavirus pandemic. That sentence represents quite a bit. The stimulus, all of the pork, those bills they put forth that no one really read, no one even knows what's in them, all of the wealth, all of the money that just seemed to flow around, being printed off and given as favors. Look at the list of how many politicians benefited directly from such legislation. They themselves consuming some of this fiat wealth that was run out of the spigot from the Fed. By the end of 2020, the amount of debt owed by the United States will amount to 98% of the nation's GDP, the CBO said. That is up from 79% last year. Total government debt will surpass the U.S. economy size next year. Again, article after article headline after headline. This is accepted fact, and there are some saying it's not enough, that there needs to be more debt. We need to do it more, make it worse. They think it's a good thing. It's part of that MMT, that modern monetary theory that you hear about. More debt, lower interest rates, negative interest rates, print off as much currency as you possibly can, give as much stimulus as you can, mail everyone a check every month. Just print it off. We can do it. There is no problem. There is no consequences. That's what these people believe. You and I both know none of that is true. We know there's consequences. We've studied them. We've looked at the history. We know what this means and what's going to happen. We've seen the velocity of the debt increase at a rate unprecedented. I took a look at it just before making this video. I haven't looked at it in a while. And we're sitting at 26 trillion, 26.7 trillion. We'll hit that 27 trillion in no time, closing in on the 30 trillion before we know it. Maybe by the end of the year, I don't know. At this point, it's just numbers and commas, decimal points. It's really a joke. It's unserviceable. There's nothing they can do. It'll never be zero. It's only going to go up. It means and represents essentially just nothing but a bankrupt and broke, dysfunctional system that's falling apart. It's in full decay. It's, at this point, every man for himself, investors, individuals, businesses, institutions, everyone's essentially running for the lifeboats as the Titanic of this economy takes on water and sinks. It's inevitable. We know the direction, we know the trajectory this is headed. Every chart, every metric, every index points to what is going to take place. History itself tells us the story, dating back to the Roman Empire. Every single nation state and government that has ever tried to do these things has failed. Ultimately, what that failure means is a lot of hardship for a lot of people, potentially a lot of violence and destruction as well. And the only thing we can do is prepare for it. We've talked about that, and that's not the purpose of today's video. The purpose is this news, which really, again, I'll remind you, isn't news. How was it news if you knew it was coming? We knew this was coming just as sure as we knew the sun would rise today. We knew that at some point the GDP would be 100% or greater than the U.S. economy. Now, rising U.S. debt money supply is leading investors to dump the dollar and buy gold. You shouldn't. This is an article that I found today while digging around, and this is actually a professor. It's an editorial piece by this individual named Peter Crabb, Northwest Nazarene University. He wrote this August 18th. Obviously, things have changed a little bit in the last 2 weeks, but I'm sure his opinion hasn't changed much. It was published at 4 a.m., so maybe he was drunk or just sleep deprived. I don't know. I'm not going to put the entire article up, just a few little bits here that will give you enough information to know what this guy is telling people. In life, the golden rule is to treat others as you would have them treat you. In times of crisis, for many, the rule changes to, quote, hoard gold. Now, I don't know why he put the two of those in the same sentence, because the golden rule and how you disperse your assets and preserve and save your wealth really, I don't know, they're not really correlated in my opinion in this sense that he's trying to do so. But again, he's from the Northwest Nazarene University, so he had to sprinkle some of that in there. And we read here, so while the government's policies certainly create risk and may ultimately result in inflation, they will, my friend, Peter, Mr. Crabb, they will result in inflation. Gold and silver are not likely to help. Okay, I don't know what parallel universe this individual resides in, but historically, dating back, let me see here, to the beginning of time, gold and silver do quite well with the backdrop he is referring to. But he's saying gold and silver are not likely to help. The prices of these commodities have risen above their value as hedge. For a reason. For a strong reason, Mr. Crabb. Economic theory and historical evidence show that the best hedge against inflation over time is an investment in business. Well, some of those businesses are not worth investing in, Mr. Crabb. As a matter of fact, they're not even going to exist in 5 or 10 years. Many of them are burdened with debt, hemorrhaging, and the products they produce or sell are not necessary. As a matter of fact, the businesses, many of them, are likely obsolete. And perhaps people don't want to loan their money or invest into their businesses. Perhaps they want to ride this storm out. And gold and silver is the ultimate safety craft, the ultimate shuttle, the ultimate lifeboat to ride out or weather a storm like this. They are an economic bunker when you're being carpet bombed by statists, by the government, inflationary measures of low interest rates, stimulus, and everything we just read about, debt. There goes my water bottle. My arms are waving about. Yes, as you're being carpet bombed by U.S. government policies or any government's policies when it comes to the economy, the best bunker you can hunker down in is precious metals. But he doesn't seem to think so. He thinks you should be investing in businesses. He's saying stocks have outperformed both commodities and real estate over reasonable investor time horizons. Oh, he's one of those guys. He's picking the investor time horizon. Yeah, they've done well. People get some dividends. What if that's not your goal? What if your goal is just not losing your wealth, preserving your wealth? What if you're that set up? Gold and silver have actually done quite well compared to many indexes. Do I need to go back and show you the chart with gold? Gaining 11% per year. I'd like to show him that chart. Over the last 15 years, Mr. Crab, have you seen the performance of gold year over year? Many of those years being 20% gains. And we're looking at a future, a multi-decade bull run with gold, where 20 and 30% gains are the norm. We've seen its track record. We've seen the resume of precious metals. That's not going to change. Think of how gold and silver have performed over the last decade and a half, last 20 years. And keep in mind, gold's only been legal to own in this country since 1974. That's why people like Mr. Crab that don't understand the history of it, they can't make that connection. He doesn't realize that you could not buy gold until 1974. And then as soon as it became legal to own, it was a heavily manipulated market with unfair legislation passed upon it to try to actually prevent people from choosing it as an investment vehicle or a place to hedge or save their wealth. It's got a lot going against it when it comes to legislation and the legal system, the tax structure system, all of that. All of that aside, it still performs quite well. Could you imagine if they unshackled gold? That's what I tell people like this, professors, economists, the anti-gold idiots. If gold was left on its own, if it was truly free market, if it wasn't taxed the way it was on its own, separately, at a higher rate, if there wasn't law after law trying to corral and curtail its usage, the investment of it, the buying and the selling of it, the transacting with it, it would essentially become its own currency, competing alongside fiat and take over. That's just the way it works, and that's the way economics works. You'd think an economics professor would know that, but it doesn't seem so. He's completely disconnected from the reality that is gold, and he even starts off the article in the title, in the headline of it, saying that against this backdrop of what's taking place, investors are choosing gold. Warren Buffett he invested in some gold mines. It looks like Barrick Gold, GLD. We have the Ohio Fire and Police Fund taking a 5% position in gold. We just covered that story the other day. Remember that? They're purchasing something like 12.5 tons of gold because they and their advisors see what's on the horizon. They see the storm clouds of hyperinflation brewing. This guy's talking about inflation like it's a possibility. Like, it might happen, it might not. I don't think so, my friend. I think he's confused. And this is what I've said this for years on this. There's a lot of people out there with letters after their names that are in what some might consider a prestigious position. Oh, he's a professor over here. I've never even heard of this university before. I mean, I don't know if maybe it's a remote learning facility. Maybe they mail you your diploma in a cereal box. I don't know. I really don't care. However, I wouldn't listen to a guy like him. But it's nice to see. It's fun. It creates a good banter, a good conversation here on the channel. It's always nice to find an article like this written by one of the anti-gold, handicapped individuals out there. I mean, I'm sure he's one of those people that was telling people not to buy gold back when it was $200 an ounce. He was probably telling people not to buy it at $400 and at $500. And when it broke 1,000, I'm sure Mr. Peter Crabb told everybody he knew this was it. It was a bubble and gold was going to fall below 1,000 all the way back down to $200 an ounce in no time. And it never did. He probably still made arguments against gold as it went from 1,000 to 1,500, telling people not to buy it, not to hedge their wealth in it, not to save in it. He most likely told them to put their money into Lehman Brothers or Bear Stearns or Wachovia or a handful of other places that were destroyed during the real estate bubble crisis of 07-08. I'm sure if he had his way, he steered many people to put their wealth into places that have lost significantly compared to gold. Whereas gold has held strong, just as it should, just as it will, and just as it will continue. So again, ignore people like him. Look at the news, look at the trends. You know what's going on. You're a smart person. You tune in for some reason on the most boring channel on YouTube for some sleepy time to be put to sleep or to be entertained or maybe just to be encouraged in your stacking. But I think all of you out there on this channel, all those in the comments and that tune in for episodes like this, you're smart enough. You know what's going on and you're not fooled by those like Peter Crabb. Thanks for tuning in here on the Junius Maltby channel. Appreciate each and every one of you. Don't forget before you leave, before you close the door behind you, to hit the like button if you can. Give it a little thumbs up and put a comment down below. What do you think of the material? What do you think's going on? Maybe offer a comment to Mr. Peter Crabb. And if you can find him out there somewhere on the internets, tell him hello from Junius Maltby. Have a good night.